So I'm sure many of you guys have heard the news, but Palantir CEO and executive, just one other person, have sold over $120 million worth of Palantir shares in just the past few days. What's going on and why are they selling? What's going on, guys? It's Ricky with TechBud Solutions here with a super quick update. I really hope that you learned something new. And if you do, please consider dropping a thumbs up and subscribing if you feel like I earned it. Let's go ahead and jump right into it. So this is the news. Palantir's Karp sells $62.7 million worth of shares. Palantir's Cohen sells, again, the second executive, $54 million worth of shares. What do they know? This is the actual filing themselves. I encourage you to look into it if you haven't done so already. And this actually shows the date, August 20th, 2025, for those that want to take a look. Now, I asked a very simple question because CEOs are always selling their shares. It's part of their plan, right? They have to announce it prior and then they just follow through with it. The part that's a little different about Alex Karp is that he's the CEO of Palantir, is that he began to change his original plan. And this pissed off a lot of investors because he didn't want to be flagged for insider trading. So he made an adjustment to his actual plan itself. Feel free to look it up. It's all public info, just so he can sell more than what was originally scheduled of his Palantir share. Now, why would the CEO of one of the most successful performing stocks of 2025 be so encouraged to sell so much of his stock? Again, I think it kind of answers itself. It's overvalued, and he knows it's overvalued. And just like GameStop and AMC, when it pumped, those executives also liquidated at those overbought levels because they knew that it was not sustainable for a long period of time to maintain those elevated levels. Now, of course, they're not going to sell all of it because that would be too much of a red flag, but how much has he sold? Well, for those that do not know, or for those that are not familiar with the platform, this is actually something on the Moomoo platform that you guys are welcome to check out. It's Moomoo AI. And I asked it a very simple question, and I asked, hey, how much did Palantir CEO sell in 2025? And very easily, he has now changed his plan. In February of 2025, this allows for a potential sale of up to 10 million shares through September 12th, 2025. This represents a framework for planned disposals, not necessarily commitment to sell all shares. He can sell up to 10 million shares. He has sold so far about 409,000 shares. There are multiple times that he has liquidated based off of a recent transaction, which is the one that we just talked about, $62.7 million worth in proceeds. He plans to sell he planned to sell 585,000 shares, which is about 88.5 million shares of the restricted stock, which is actually one of the filings that we saw. How much has he sold? Between 2024, but a majority of it being 2025 with these insane valuations, $2 billion worth of Palantir stock. I'm going to get back to this in just a little bit, so hold on. $2 billion, remember that number, is what he's made off of his company, right? In just the past year, these sales occurred under his 10b5-1 plans, which are structured to avoid insider trading allegations. That is the plan that he adjusted that pissed off a lot of investors because he then changed it so he can sell a lot more of his shares outside of his original plan. He made the change. Now, how much of this has he sold from his ownership? This is the thing that I think is very important to pay attention to. Let's see if I can pull it up right here. Between 2024 and 2025, the amount that he has sold represents about 21% of his holdings. He has sold more than 1/5 of what he owns of Palantir stock in just the past year. So this isn't just that he sold a portion or a very small amount. He's just trimming profits. 1/5, 21%. If you know anything about how CEOs normally trim some profit, this is a very aggressive way. Now, again, this is coming from a CEO that openly likes to hype up his stock and hype up his company, and rightfully so, as any successful CEO would. Now, why would he be so willing to sell Palantir stock? Well, again, this is a company. Let me pull this up in the 4-hour time frame very quickly. This is a company that from the lows that we made of $65 to the current price of the 160 has experienced about from 65 to where we're trading at right around 158, so right around 160, about a 101% ROI. But if we take previous all-time highs into consideration, which is just before last week, it's a 138% return in the past 4 months of trading. Could you imagine why the CEO would be so willing to sell? And that's just in the past 4 months, like we're saying. If we look at the daily chart, this is a company, a stock that in 2023, mid 2023, early to mid, was trading at $7 per share, $8 per share, and is now trading at 160 and has hit highs of 190. I could only imagine why he would be so motivated to sell. But there's people out there that are still encouraging you to buy. Well, let's look at this very quickly, okay? Remember the number that I told you to remember? $2 billion. $2 billion is what Alex Karp, the CEO, has made from selling Palantir stock. Well, how much has Palantir made? Palantir is a publicly traded company, right, that has revenue of $3.4 billion, but of course it has expenses. Its net income is $772 million. Not even $1 billion is what this company makes in profit per year. But yet, not $1 billion, but yet in the past year, the CEO has made more than $2 billion. Now again, why should it matter how much the CEO has made versus the actual company, right? You can use Elon Musk as an example. That dude liquidates his shares, correct? And everyone also talks about and agrees that Tesla is incredibly overvalued based off of what it's valued at versus what the company actually produces, especially if you've paid attention at recent quarters, there's so much projected valuation. Now, in my opinion, this one's a little bit more extreme. This company has a PE ratio of 493 times its earnings, meaning that for the next 5 years, this company would have to grow at a rate of 50% year over year to even justify its current valuation today. Think about that. It's a company that if you look at its market cap at $376 billion, yet it produces less than $1 billion in net income. But its CEO has made $2 billion in the last year. Again, I know that this is an incredibly bullish stock. And in short term, with current market environment and conditions, this company can continue to thrive. And it would be naive for me to say that it can't, because especially with rate cuts possibly around the corner, yes, this thing can continue to push. So don't get my words twisted. In the short term, it does make sense to possibly trade Palantir because it is bullish and direction is in your favor. And like we all know, the trend is your friend. But please, do not get it confused between a trade and an investment. There's a reason the CEO is selling so much. And there's a reason so many people are trying to encourage you to invest in this company right now. Let me make this very clear, a challenge for you. Anybody that encourages you to buy Palantir because it's trading at 160 per share, I challenge you to ask them, hey, you want me to buy Palantir at 160? First, what do you own it at? I can reassure you it's going to be sub $100 per share, and for most, sub $50 per share. So it's very easy for them to encourage you to buy more because it would cause the price to go up. And them, with an average price of $30 to $50 per share, they're already up a ton of money. So even if Palantir does retrace 50%, which again, according to a series of analysts, if you look at this very quickly, you can look at financial analysts, you can look at, the valuation. You can see that fair value, according to Moomoo, is about $115 per share, 28% downside. If you look at investing.com, according to a series of analysts, 50% downside, fair average value is $78 per share. There's at least 50 to 40% of potential retracement. So very, very quick. If it's a stock that they're so willing to encourage you to buy with your hard-earned money, ask them, hey, well, now that I know your average price, do me a solid. If you want me to buy at 160, I want you to double your position, double your exposure at 160 per share. Very simple. And I can promise you none of them would do it because it's just not worth the risk. Sorry to interrupt the video, but I had to let you know that your time is running out. Moomoo is offering you up to $1,000 of NVIDIA shares. Yes, NVIDIA, one of the most valuable companies that's publicly traded. Depending on your initial deposit, you can earn up to $1,000. If you want to learn more about it, you're not going to want to miss out. First link in the description down below. Again, if you're tired of your old and outdated brokerage, look no further. Why not test out Moomoo? Not only can you earn up to $1,000 of NVIDIA shares, but you can also earn up to 8.1% APY on uninvested cash. Meaning that once you transfer your money on over to Moomoo, if you don't even have it invested because maybe markets are too overvalued, you want to be safe, you're actually going to be earning interest while that money just sits in your account. But again, if you want to learn more about it, first link in the description down below. You're not going to want to miss out. And yes, of course, it's available in the US and much more. First link down below, check it out. And even if it does go to $200, from 160 to 200, don't get that wrong. It is, again, a great return, but it's very easy to say when their average price per share is $30 or $50 per share. When your risk is from 160 to 200, you can make $40 per share. But what if it drops to 100? What if it drops back down to 65? What's your downside risk? Now your downside risk is much greater than your upside potential. Any person with common risk to reward ratios knows that as an investment, it's not worth the risk. It's not a deal. But again, the difference between a good investment and the difference between a trade as direction is in your favor. Trade it all you want. You're an adult. You can do whatever it is that you want. As long as direction is in your favor, just know when to get in, get out, manage that risk, make your money, and you bounce. But please, don't use margin. Don't be leveraged at these overbought levels, thinking that you're being looked after by these people that are encouraging you to buy while they're sitting at their average price of $20, $30, or $50 per share. They have a lot of cushion to work with. You don't. Understand the difference. If you want some skin in the game, again, do it with a dollar amount that you can afford to lose. There's a reason the CEO is so willing to sell, and it's simply because market conditions are very uncertain right now. In the short term, anything can happen. We can continue to push up. That should never be up for debate. Stocks and markets can always push up higher, but we all know that when they do come crashing down, it's always the most overvalued stocks like Palantir that experience the hardest and most aggressive drops. So again, I hope that this video simply encourages you to not just be sold a dream of how much money you can make, but it encourages you to take position size into consideration and also downside risk, making sure that the risk to reward ratios align with your criteria. And if they do, be my guest, buy into it. I get it. It's a very attractive stock. It's AI related, and it's one of the most trendy stocks for 2025. So I'm never here to hold you back. I just want you to do something where you understand both sides of that potential opportunity. I hope that earned a thumbs up. Please consider subscribing. And if you want to watch me trade live as soon as Monday, it's going to be the second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.